Hey, what's up? Excuse me. I'm okay. I'm doing all right. Not the best, not the worst. Just okay. Okay. How do you adjust? I thought you could change this. Let me see here. Let me see if I can adjust the volume a little bit on here because I think it's pretty low. I'm going to bump it up just a bit. There we go. Okay. Well, today's kind of an off day. It's Veterans Day, so happy Veterans Day if you're a veteran. And the market feels very illiquid today. There is certainly some movement across a few tickers that are pretty intense. For AMC and GME, I'm not seeing too much. It's not horrible. It's kind of just sitting where it needs to sit, but there's a bit of perhaps some confusion to some degree about what may or may not happen going into the next week or so. And I wanted to clarify. I feel like we've kind of gone through this multiple times at this point, and I'm not trying to like beat the horse to death, but there is a sense in which maybe folks don't have like a strong as a grip, and I get like kind of concerned when I see stuff sometimes, and it may not even be the case that it's actually a problem, but I get concerned that sometimes when I see comments on the Discord or whatever that just sound like very out there, like why would you not expect that kind of thing? Always in my mind, I'm always like, why would you not expect that? So I'm always thinking like, is this not an expectation that I made, I guess, abundantly clear enough or simple enough? So we're actually looking at GameStop right now. We'll look at this first. So this particular setup is of great interest to me, and I had done a comparison like this a few different times where I looked at what had gone on in April to May and what was going on here. Although, quite simply, what's going on here is extremely slow by comparison. So if you're going to draw comparisons, you would say it's like really, really slow, but it could be very similar. And we even looked at this setup and this setup as potential kind of versions of similar ideas. What's curious is that although it is going low here, and maybe that makes us a bit uncomfortable, there was a sense in which this could be like another strong version of the same iteration. And indeed, it is playing out as they would. So here you have kind of a rebound that sits up higher and then it pushes again going into September. And that is typically like a positive sign. It's sometimes maybe used, maybe people would say, well, it's a bear flag or something, right? Or it's a widening bear flag or something like that. Well, it certainly could be. That's not impossible. And we had spoke about this a number of times before because we talked about how if this were to drive down again, you'd have to look at sort of these wave crosses, right? So this is one right here, and you would basically be able to sort of take a cross section of this and say, well, if it's going to lay up on top of the next wave, that's certainly not impossible. I mean, this one did, and it's sort of a mixed bag because you get perhaps this sense that like, well, that means it's going to dump, right? It's going to come way, 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 way down. But I don't see it as particularly unusual to think about this dropping to 17 or 18. Some people think that that's not possible, or they think that that's too low or something. I'm not convinced it will do that, but I also know that in my mind, like, that's totally been on the table the whole time, and I don't see it as particularly unusual. I mean, to me, it's like, well, we started back here, we backed up to like 17. It really would make sense to drop kind of close to that because we haven't checked it, since then. And I think that that's just one of those basic facts of liquidity. It's going to go to wherever it finds the buyers, and ultimately going and checking certain levels is a part of that. But I've made the comparison, and I did it here just to show you, because it's been on my chart for a minute, and I've been using it, and I've been posting on the Discord about it. But I also felt like it was probably necessary maybe to look at this a little bit more in depth and talk about what it is I actually did here and why I did it. And so when this started to break down, back here, this is way back in November 2022, I would consider this second part the second part. So that's really important, meaning like this is essentially like a halfway point. And this comes from, without going into crazy detail, pretty much the exact same thing we've talked about every time we talked about GME, which is this 25 level, and this being essentially like a middle zone here on the walk down, big S curve down. You can see the interactions here on this bottom, but it also comes from a cross wave, which I don't know if I use enough of this terminology frequently enough for everybody who's kind of newer to know what I'm talking about. But this concept of a cross, it is a sense of support, but it's more than that. It can be a resistance at times. It can also be a like an acting creek at times. But just to show you like really simply and visually, this is essentially what a cross could be, right? It's like, oh, it's the middle of an S curve. Well, yeah, kind of. It's not that simple though, because sometimes, as you can see here, for example, this might play into like a larger motion down that doesn't necessarily interact with that line very much at all. So it's really easy when you see it here going up, for like the little demo that I'm doing on the screen, because it's like, oh, it's interacting with that middle very clearly. But when it's going down, and we'll make this like a different color, sometimes the cross comes from a previous area, and it's not evidently, like, it's not very much of an interaction. Like the only interaction you're getting is like, okay, well, it kind of signified like a halfway point. So again, if I take away this doesn't look like much at all, you know? But what we found is that this is a very important interaction in the market. And a lot of times you do get, which I'm going to literally almost copy what you see on the chart there, is you will get like a kind of a wave interaction here on the walk down, and you'll see it interact with the middle. This is very, very, very normal, and if not almost habitual at times. One of the first major places that I looked at this was really early on, when we were doing AMC charting back in 2022. I mean, that was 3 years ago now, you know, it was a long time ago. But even at that time, there was a sense in which I guess I kind of recognized there was an importance to it, because it's like the market was kind of using, not invisible, but like perceived trajectory, right, to kind of define movement in the stock. And I kind of saw it here, but I didn't really know what to make of it. Later, I was like, oh, this kind of reminds us of what's happening now, right? This big move right here looks a lot like what we saw in that huge pump. And I think it is, in some ways, the same idea, but it looks a lot like what we saw in that big pump back in May 2024, right? When you look at March, it's like really similar. And then the difference now is that, yeah, we're doing this really long, boring sideways stuff, but we've been very elevated. We're not like dipping through and making extreme signs of weakness, right, all throughout here like we're going to distribute. And that leads us more into the model of like, okay, well, yeah, this may indeed be doing something quite similar, but it's certainly not weak by comparison, right? So you're getting a lot more of a kind of a more succinct walk down that looks a little more like this. I'm just kind of doodling it. However, the reason I'm bringing this up right now and talking about GME right here is because just like what you might expect on the middle here, where this is like the middle of an S curve. There's some interaction between what we perceive as, again, we would say they're like cat ears or something, right? This setup right here in the middle. What we perceive there is, I think, reality, that there is a real trend that's trying to build out there, but it doesn't manifest as anything anywhere else other than this one hit. And ultimately what this is not just some kind of a trend, because ultimately that trend doesn't even hold. There's no real trend to speak of. It's really like what I call a cross, because it's going through the motion and it's signifying a probable triangulation point with the previous, or I should say the last support that hadn't been checked yet. So notice that like when we come down here, and this kind of, again, this kind of motion, I think, really does kind of spat in the face of the idea that this is not predictable. When people say it's not predictable, this is like exactly like what happened in 2024 and in the push up to 4, which is that you had a support, it dropped, it doesn't back up all the way. It does it twice, and then it comes back later, and it backs all the way up to that support region and checks it. This is identical to what we see right here in 2024. I mean, it could not be, in some ways it like could not be any simpler, right? It's like there's this, and it's kind of hard because it doesn't seem like it's there perhaps, but there it is. Like it doesn't back up far enough when it goes up here. And that's when I was like, oh, I think it needs to go up to near 14. And I had been looking at these ledges way up top, like right there. And I was like, it should be around 14. It does come to 1330 eventually in extended hours, but that's the same exact concept. It did not, faze me one bit that this actually does a pretty darn good job as well of like triangulating where this move is. So this gives you a sense in which, yeah, that's where the support should be, or it was at one point, even though it doesn't seem to exist here. And then since then, we've used a lot of things like chart shifting or whatever. But perhaps what's more noteworthy is what comes after that, which is on this sell down. And so during this sell down period, there is a cross that happens much like there is here. So both of these have a very similar motion. They're not exactly identical in terms of their length. They're close, but they're not identical, right? Nor are they particularly easy to spot in terms of like, where is the actual middle? If you had just done like a center mark here, I mean, you could probably kind of guesswork it and see if you could figure it out. Maybe there's another one right here. I don't find that to be particularly easy, right, to digest, and I don't find it to be particularly easy to figure out. But there is another one here. You'd have to come in pretty close on the January 11th area, 2022, to find it, okay? This is no different than what we see on GameStop, and this is where I was bringing up here, where this becomes that cross, but it doesn't seem to have a lot of interaction outside of this region. And there is one specific area here where this interacts, and this does come back up and check it. But what is it testing, right? Well, we know this opened up around like 64, which is kind of a weird number. It doesn't, to me, it doesn't ring true as like the best possible number, because there's other things here, but you would definitely say, well, it's going back to check this top at the very least. It's not a bottom, but it's going back to check this top around 64. That's with liquidity level. The secondary motion might be more telling though, because the secondary motion actually only comes up here to about 47. This rings a bit more true, because if you go back here and you look at that last support, this is a lot closer perhaps to what we might have expected. Now this backup already happened in March 2022, just like we're talking about AMC, and this is a much larger one. We know that AMC did not come back up that high. We know that it's been shifted down. I've already made the argument many times, although some people apparently, a few, not a lot, but some people I think are still very much of the impression that it's too low. My estimates are too low, but I've said it once, I'll say it again, like the chart's downward, and until it stops being downward, there's really no reason to expect it to have some kind of massive push to like back up to these levels again. There's just no evidence of that happening. Even here, at an angle, this certainly met this red line. It doesn't even meet that. It gets to like the lower end right here. I mean, so even with a shift in mind, if the shift was there, it would be right here around like 23. That's more in line with this top, which again would put it more in line horizontally here with what's going on with GameStop. GameStop's very horizontal. AMC's downward. That's all there is to it. And I don't think you should apply one to the other so readily. I think you just have to kind of take them as they are. And they do work quite nicely in sync with each other. But the reason I'm talking about this right here is because there's another one of these in this region. And I think that when we get down to it, okay, we get down to like kind of the nitty gritty of it, it may not be as simple as, it's just right here and that's where it is and so on and so forth. There could be even some more of that information that's being found right now in July. But I have attested to what I believe is true here, which is, you go through this bottom and you can see like that's the main interaction going up. And it's quite high. And now this is a macro move. Potentially could go even higher. But we see something similar here in this setup that leads us to that 44 area. And it's, again, almost parallel, succinct. So if this were indeed to kind of cross down here, and this is out of the middle, you might be able to estimate where you're going to go potentially in the future. Now, I have been using this for the purpose of kind of one-to-one comparisons and really trying to keep everything as ratioed as I can, like kind of rigid, but as ratioed as I can, right? So that it's not like way out there in left field. Like I'm not picking numbers out of nowhere. And at the same time, I'm also thinking about this because this is a huge move. So from the time, so there's two things. One, it's like I'm thinking of the ratio. I just showed you that. And the ratio would suggest 44 to 48. Seems reasonable. It also matches with this downtrend and several other things. So there's tons of stuff there, like fibs and all kinds of stuff. I'm like, yeah, that seems like a really reasonable target. But I'm also thinking about this in terms of like the second half. Because when this goes down, it may not be obvious, but it's not lost on me either. I still know in the back of my head, this is a shrinking model because even though it's very difficult to track at times, I know that when we dealt with something like this back in March, for example, of 2022, the markers that were being presented in the sell down phase here, which basically is like the second half, right, of this bigger motion down. And you can see it as one gigantic motion down if you want. That's totally reasonable. But you could see it here as well. There's a shrinking iteration that happened in there. And I remember calling it out and it ran like 40% or something the next day. I remember it very vividly because I really was spending time working with that stuff on the nitty gritty. I was still in like a fractal brain mindset. So I was really trying to figure things out based on fractals and junk. And I saw this as a January model. This is oddly very predictive, which I also think is really interesting because I remember back here saying that I thought this was like, this is January, this is June, and then this is the rest. And I remember at the time distinctly, I think I was still on like social media and stuff. People were like, well, if that was January, that was garbage. And I was like, well, it is what it is. I don't know what to tell you, but I had been using the model that I had been using was also very similar, using like certain trajectories, to try to determine where those things are and like the waves, how they were turning up. I was starting to like really work on wave stuff. At the time, I used really bizarre looking waves here. I remember they were really weird, really weird stuff. But I was like, this oddly is very predictive of what ended up happening in the future because indeed we did come down. This is really similar. I would not have drawn that comparison till just now, but this is really similar. We did indeed come down, form a ledge, and then eventually went off the face of the earth, and it ends up being like a 50-50 drop. Like, it's a huge drop. Anyways, I digress. My point in this was not to say like, haha, see, look, it's all connected. It is all connected. But also that this concept right here, I don't know if this is one-to-one. I'm just going to grab it. I remember it being pretty close. But the concept here was like during this breakdown, if you identified where that middle was, which was like right here, crossing through this, you could identify roughly where the next top was going to be. And I did it in that time in a slightly different way. It wasn't until later that I was like, oh, these are just kind of like backups on these parallels, right? And these parallels, that's why I knew they were probably similar, because I remember them being very similar later. But this right here is really where the indication comes from. And you kind of could tell even now, and I even have the line on the chart right now, but this is where that motion is. This is not a creek then, as would be commonly described. This is not like anything Wyckofian per se. What is it though, right? How is it possible that that is indeed basically looking forward? And if you go back further, although again, I won't say it's like perfect, if you go back a little bit further and you just go to that previous bottom, 1474, I'm going to try to make sure I keep it the same. This is very predictive of where the stock price comes back to, you know. So why does that matter? It matters because when we're doing stuff now and we're looking at today, I've called it a sweep, right? A sweep is where you're going for low liquidity or high liquidity, and it does make a huge difference in terms of direction change. And I can even pull up like a chart. I showed a chart the other day because someone in the Discord asked to explain that better. So I tried my best to make a visual for it to explain it in terms that I thought would be understood. This motion right here continues, right? And sweeps are really a signal that you're going to change direction, right? In these circumstances, this particular parallel continues, and it continues onward to impress. And impresses upon me that the idea here may be a little bit convoluted, so bear with me. But you're basically on each of these parallels, and I'm kind of coming full circle. We're about to finish this talk about these triangulations. But you're basically coming like full circle here. You are establishing like a trajectory upward, right? That's essentially not a real trend. It's not really there. There's not much to it. This is not something that I would look at and say, this is a trend right here. If it is, it's kind of weak. But then it interacts with it as a distribution marker as time goes on. And arguably, it's been pretty much the exact same for AMC the whole way down. Like, it's been really this one angle. And GME has a different angle on it. But again, what will we be talking about when we talk about shrinking iterations would be after the second cat ear, the drive down is the sweep, right? You're pushing down into low liquidity until what? Until you break out, you cross the creek back up. If it's bullish, this is what happens. If it's bullish, this will come back above, it will hold and continue. If it's bearish, this will come back up. It will either distribute by doing a sweep over the top and then coming back through, or it could be kind of prolonged. Like this is like a UTAD where it comes up after this distribution, it comes back up and it spends a lot longer there, weeks there, right, before coming back down. That is more typical of a UTAD, okay? In the middle here, there's a shrinking iteration that happens very clearly. If you want to go study it, you can. I'm not going to do it right now. But it goes through here, and it's right in this section right there. And there's a kind of a micro double M, and then it gets smaller, and then there's another double M on the outside of it. And it really comes to a pinpoint, you know, at this particular level here, breaks out and runs. This level comes back later, interestingly, in what I called another shrinking iteration. I know it's like, well, these were maybe overused terms perhaps at different points, but it's not overused here because, again, this is essentially the exact same model. I made that argument at the time, and just like every other time, there's always people that'll say like, well, I don't think that's the way it's going to happen or whatever. Look, I'm not really, in the business of always trying to say, yeah, I'm right about this or I'm right about that. But there wasn't really much doubt in my brain what was going on here. And even to this day, I'm like, I look back at this kind of stuff and I'm like, I don't really know how anybody would argue with this. Like, it's super strange to me. Like, it's the same model. It's the exact same. It's just, there's visually like some differences, I suppose. But if you just ask the question, like, what's happening here? It's the exact same. There's virtually no difference in terms of like the backups that are going on, the weaknesses that are going on, the UTAD, like all of this stuff is identical. Like this essentially becomes like the same model. And then it tries to do it one more time here and it kind of fails and this builds out in a different way. And ultimately this ended up being distributive anyways. And I could go on and on and on about things shrinking and yada, yada, yada. I'm not going to do that. But what I wanted to say was that the way in which this kind of builds out piecemeal over time, it's easy to see it on AMC. I think it's really visually very easy to see. Like, I don't find this to be controversial. I don't find it even really to be a question that I have to argue about. But to this day, people will say, well, you don't get anything right. You never knew it was going to happen. It's like, this was pretty much 1-to-1. Like, I knew what was going on and it did happen that way and it stunk, but it happened that way. And with GameStop, I never tried to do that. I couldn't say that because I never tried to do it. I never tried to like model out a shrinking iteration. I never tried to, figure that part out here. I wasn't really concerned about it at all. And I think it would be challenging. There's a lot of time that passes by here, and it doesn't really seem to have the same model to some degree. Okay, so I'm coming into the point of this, right, which is that this has parallels. They're kind of building out one on the next, on the next, on the next. They're doing the same thing over and over again, right, until they change direction. There's probably a reductionist way of looking at it, which is to sort of take these things in stride and try to maybe interpret what's going on with these kind of push-ups and these breakdowns, so on and so forth. This is very similar. This one's kind of like built out more sideways. You can see it's a similar motion here, and it comes back up. Again, I said I wasn't going to like over-explain it. But my point in that was that it occurred to me that there might be a reductionist model here, and we had talked about iterative shrinking into this September move, right, about the end of August here. And I believe that that's there, but it's also like clearly not the end. So I was like, well, that's the problem with shrinking iterations, is that you might get it right, but then it just keeps going. And you're like, what happened? Well, it's bigger. I mean, it's that simple. Like, you were looking at a smaller area. It was indeed shrinking. You probably were right about it, but then it changes. Like, that's what happens here too. Like, this is definitely a shrinking iteration, not just because it's a diminishing range, but because it's literally doing the same thing over and over again in repetition. And that's an iterative motion. It's behavioral, right? When it changes direction, it doesn't ultimately change the whole range setup. Like, it's just part of it. So I went back and I looked at this and I thought, well, maybe there's some semblance of that here. So what I did is I did something really simple, which is I built out 50-50 motions. So I'm going to do my best to not butcher this chart. And so what this is, and I'll kind of show you real quick. This is just very simple. It may seem a little complicated. It's really not. It's very simple. What I did is I took, I can even get rid of that one for just a second. I just basically divided this in half. So from the time that this breaks down, essentially, right, and it makes these peaks from the time till it gets to the bottom, is there a reductionist model here? And there is. So what I did is I took that and then I divided that one in half again. And you see the yellow line right there. And you can see, oh, that's a trend. That's cool. And then I did it again. And if you look closely, you can see, well, there it is again, right? The reason this works very neatly on GME, but not on AMC, or at least it doesn't seem to work well on AMC, is because during this time period, AMC has this really bizarre, huge drop, right? By comparison, it's very bizarre, and it doesn't seem to continue. You kind of are like, how would you possibly keep, I don't know, like how would you keep measuring that out, without a shift chart? Like it just doesn't make sense. I wouldn't have done that at the time. But it is something to think about because I don't think that the operator has changed their MO that much. This looks very much the same. It's not quite as steep. And I've mentioned this before. It's not quite as steep. But the motion there of upside movement is the same. Are people still believing in this? Again, like what is there to argue about? Give me a technical reason why this isn't accurate, what I'm talking about right now, and I will address that. Because you're the one that subscribed to me in order to comment. So you're not doing anything but giving me props by subscribing. If you would like to debate this, go for it. If you want to debate what I'm talking about right now, the walk down here, the distributive motion walk down, then go for it. I'm really not sure where you're going with this, because well, maybe so, but he should say that, or he or she, whoever it is. Because I'm genuinely I don't know how anyone. It's almost like a willful ignorance. Like you'd have to look at it and be like, this doesn't make sense. I don't know how anyone could look at this and say that that's not the same behavioral pattern from an operational standpoint. Like, how do we get the stock to go down? We do this. If it's just MOAS or buying up to some huge number, well, that's not me either, but I also think that there's a technical case for it. You got it backwards. Well, kind of. There's both. Look, it doesn't make any sense for anyone in their right mind who knows anything about accumulation or distribution to look at this and let's look at the range from 2020. I'm going to address this really quick and we'll move on. And this isn't me trying to, belittle you or condescend to you or something. I'm genuinely let's just talk about this for a second, okay? It's really important to understand that when we talk about an accumulation or a distribution, those are Wyckoffean terms to describe usually what is operator behavior. An operator is a composite operator. It's a bunch of different hedge funds and institutional funds who are buying or selling a stock. It would be inaccurate to say this range down bottom was a distribution. Why? Because in hindsight, the 2020 range has the markings of accumulation and ultimately breaks out and rises above the range top into a reaccumulation and then continues. This isn't debatable. This is simply what happened. However, during that time period, we would look back at that and say that was an accumulation. That's actually pretty clear with an auto reaction, a phase B top, phase B bottom, and a spring. It's got all the parts. That being said, in retrospect, it's easy to see it. In the moment, it may have been very difficult because this is the time when, September is when the market breaks out. Even GME's breaking out going into this period and starting to move out going into November. GME is making higher highs at that point and it's breaking out. AMC is going down. So for someone to sit there and say this could be an accumulation at that time, they would have been laughed out of the room by your meme crowd, your meme stock crowd, who, not everybody, okay, because even at that time you had guys like Roy and Kitty who were saying, no, I think this is, going the other way. He had other reasons to say that, but that's what he thought. And he wasn't specifically talking about AMC. But I've made the case before that, like, this is not, I don't care what anybody says. This is not out of control. I think someone said something like that, and I don't want to, really don't want to diss anybody, but this is not out of control. The only moment here that resembles something out of control is this massive push up with the buy button removal. That's it. Everything else here matches fibs. Everything else here matches the liquidity setup. It's not at all out of control. It looks like an accumulation on the big picture. But that being said, right, the liquidity that's being built up here in this liquid center, which is eventually used, by the way, this is a 50-50 right here when it finally leaves. That's a 50-50. If you look at where the high liquidity center is, right here in the middle, this is the place where you have the question, is this an accumulation right here? Well, not really, no. This is an up thrust. There's weakness here, and then it goes up again and sells off again, UTAD. In and of itself, this tiny little area is not accumulative by itself, right? Why then did they do this? Well, we could talk about all kinds of stuff when it comes to Wyckoff as to why they would do that. The simplest answer is just the question of liquidity, right? When you traded low down here, did you gather and trade all the shares that could be gathered and traded? If the answer is no, then it makes perfect sense why the operator then turns this into kind of a major macro range of sorts, right? And it's really important to note because this is pretty much equivalent in terms of a wave formation. This is a double top, and then there's like a double bottom. Both of them have sweeps. This is a sweep at the top. This is a sweep at the bottom. And those change the direction of the chart. So the sweep at the top right here changes the direction that we're moving. The sweep at the bottom right here changes the direction that we're moving. This is very simple stuff. Okay, even in the midst of this, you can actually see micro sweeps here that change the direction, and here that change the direction, right? That take you from top to bottom range in these kind of squishy middle areas. So when I look at this, like, I don't think it's that complex just to say, some people will say, well, you shouldn't say spring there or this or that, whatever. You know, call it a sweep, call it a liquidity grab. It's a check, right? It's a check and a test, a strength test, up and down. These define the movement directional changes that you see that then follow. Okay? So when I look back at this, yeah, you can talk about this as a perfect Wyckofian range, sure. Was there distribution in this? Yeah, this top area. This is a distributive action. Was there accumulation in this top area, though, while that distributive action was taking place? Yeah. How do you know that? Because the bigger range is accumulative, like the bigger setup is accumulative. Why would you do only one or only the other? So, yeah, were there shares that were probably sold here from the bottom that was bought up? Sure. Ultimately, we have to just look at it and say it is what it is. We don't need to even question it anymore because it's already happened. It went down, and it went down after doing an upthrust. It clearly was a distributive action. They wanted to go back and get the liquidity, and you can go back and you can look at the VRVP and take a look at how much liquidity was actually traded. This is the highest volume region right here. Yeah, absolutely. 100% happy Veterans Day. Thank you for your service. If you're continuing to serve, if you have served. Didn't forget, mention it at the beginning of the trend or the stream. I just haven't said it again. This right here, this setup, okay, buying, but there's also, selling. So when we look at this reversal, then it makes sense to me that it's pretty much the same amount of time spent. There is a walk down here that's, I would say, fairly succinct. I wouldn't say they're 1-to-1 in terms of time spent. They're pretty close. And then even still, when you go further, this is operator stuff 101. How long does it take you to satisfy a range, right, or a region? Well, there you go. Oh, but this was already, traded back in the day. This blah, 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 blah. Sure. I mean, of course it was. This was also traded as well. There were some shares that were trading hands back here. Just like when you go into the reaccumulation or the distribution, there's some shares that have been traded at the top. This wasn't the only time you'd been in this region. There were shares traded back here very lightly. You can see tops and bottoms. All right, we're revisiting different ranges, okay? I'm not using volume range profile. I'm just drawing little bars everywhere. So your question is like, that's fine. I'm not mad. Your question is like, Mac was asking, is this all accumulation with no distribution? Well, no, right? On the way down, again, you have both. So you can see it visually in the bottoms that are present and the tops that are present. Again, very much the same idea of like during this time period, there's distribution. Yeah, of course there is. And then during this time period down bottom, almost the exact same amount of time, right? Wave top, wave bottom. There's accumulation. But if we're asking like what's the reason for it, the reason is not to take it back up. The reason here was to bring the shares back up to these levels to sell. And if you look back at where that is, they're selling, back in this middle region. Just like here, they were buying off this middle region to sell higher. They're selling off this region now that they were buying off of before in order to drive the price lower. That's not necessarily all black and white because we know that it's a measured thing as well. So we don't know for a fact what we don't know. It's possible that there wasn't a certainty about a lot of this stuff. I don't pretend like, and I don't think anyone should pretend like it's all 100% predetermined. We don't know that for a fact. However, again, taking this into perspective of scale, it's not really that hard to imagine why then. When we see these trends that are formed or whatever, that we're kind of, we're in a distribution here. Like, why do we continually see these like up thrusts? Why do we have all these fake out runs, right? Almost indefinitely from March 2022 until August. And even this one, this big giant push in May. Well, this is all top motion. And again, I don't know who would look at this and suggest otherwise, but if you take a gander at it and just take a look at, all right, what's the general movement of the ticker? It's like, oh, it's bottoming here, it's topping here, it's bottoming here. Like, it's that simple. I think that's the simplicity of it. And that's why I've attested to the fact that I think this is more than likely a bottom, right? So for GameStop, and I'm going kind of in circle here, when I'm talking about this like reductionist motion, I'm really looking at this and just saying, are they building a mechanism by which they're going to use sort of a laddered approach to get out? And I went in and I looked at the mechanism down, and I thought to myself that, yeah, it does seem to be that way. And when you do 50-50 reductions all the way down, they do follow. I mean, it doesn't have to be this way. It didn't have to be perfect, but it just is. It's really, really nice. And you get into this really tight region. And then when it breaks out, you get this kind of melt up. It feels like it comes out of nowhere. But if you look at where these intersections are, right here, for example, all of this stuff is triangulated. So you see where I'm coming through with this now? I'm like talking about why these kind of drop ledges that we see, when we see these drop ledges, if they're not back testing it immediately, hence right here, why when we drop through 14 and we didn't back test it immediately, I'm still talking about 14 even though we're down at $2. And then we go to 14 And people are like, whoa, that came out of nowhere. And it's kind of like, no, it didn't. They're using these as like a mechanism. So there's a clear effort right here, right? Before that 2022 ever happens, there's this clear effort to kind of trade liquidity in this range, and they're doing a lot to load up on shorts probably. Then they're doing a huge amount to bring it down, and then they're probably covering a lot of their short positions with this gigantic push up. And also swapping out shares, right, from strong to weak hands in a distributive action. This is all part of that model, behavior model that's being used, and they're making a lot of money off of it. Okay. You could also look at it as just like a back test if you want, like, oh, it's a supply test. Just like when you're going up, you back up, right? To do a strength test, you back up to, check that the market has strength that it's going to keep buying up. Well, here you're checking if the sellers have strength and it keeps selling down. Sure. There's numbers of ways to think about it. You can think about it like an Elliott wave. Why do Elliott waves work? Same deal. All right, it's principled Fibonacci retracements. That's all that is. Pretty straightforward. So when I look at this, I'm like, hey, this setup right here, I don't see it as very complex. I see it as double top, double bottom, reversal out of the range. I also see it as, distributive action at the top, distributive action at the bottom. And we see the same thing here, distributive action top, distributive action bottom, but then ultimately the purpose of this was to kind of walk it back down to get it back to the same region that it was in. And yeah, I think this ends up being kind of the model, the behavior model for the entire ticker. So does that mean that we're just never going to come back again? Well, I'm not sure 1,000%. And I mentioned this before in about January of 2024, which is, again, about 2 years ago now, that if you look at this as a humongous widening, it kind of begs the question, like, are we really ever going to leave this widening? And at that time, it's strangely accurate. But I didn't really consider it the most likely thing. I probably dismissed it. At that time, I said, well, you could have something like what you saw here in March, where this comes low, and then eventually, like, it builds out, but it never goes up, yada, yada, yada. We do have something like this, but it did not become a weakness. Like, there's no clear sign of weakness in here, and that's really important. It looks more to me, again, like what we saw in 2000, and this is very similar, by the way, what we saw in 2020, where, yeah, there is indeed like a distributive top here that's meant to get you back down to trade liquidity at the bottom. Notice how the timing on this is almost 1-to-1 in terms of how long we spent in the top, how long we spent in the bottom. Precisely, the timing ended on October 28th as sort of 1-to-1. We'd also kind of have to assume that this April bottom was the actual bottom. And I have suspicion that it might be the May 5th bottom for other reasons, because that's really where it jumped the local creek and found support there on May 5th and then took off. I think that could be the more real bottom, where that was, again, a sweep low, and then it found support and ran. This is pretty much the same. And so the biggest difference between this and 2020, and I've already shown the comparisons to be very similar at different times, is the length at which we're spending in each range. Quite significant. Another difference is that where these are in relation to kind of the bigger picture might surprise some people. I did a fib extension here on AMC the other day, and this fib extension goes to the 2618. So if you do the bottom extension on AMC, and I'm a little all over the place, but we're getting there, okay? This bottom extension on AMC, I'm going to hide all this other junk for just a second. This bottom extension on AMC, when you go from really the divergent 4-hour bottom. So I'm not going to use, this is where the bigger divergence happens right here. We have something like that right now. We also have evidence that, yeah, we're in a sweep. We're lower than we were on the phase B bottom, which was at 246. We're at 244 right now. If you were paying attention yesterday, you know that we hit 237, which also went below the floor. That's Very similar. It's not, doesn't need to be the same, but it is very similar to what happened in 2020 when we came beneath the floor here. We actually went back beneath the original bottom as well, ever so slightly, by a couple pennies, which is what happened the other day. Okay. That is essentially a sweep. Like you're checking the low liquidity. You also have this big divergence here. Okay. And what I did is I went and I checked and I said, all right, where did that go? I know that fib extension's kind of weird here because it's not actually a higher low, but I just wanted to see what it was. It's a lower low. And it's almost exactly at the 2618. And then curiously, and I mentioned this a minute ago, curiously, if you look at this and you look at the top to bottom motion here, that is the middle liquidity. So you're basically doing like a liquidity jump. You're using this as an anchor point, and this is where we back up to. You see that 50% marker right there at 28.94? It's like a 786 retracement on the bigger move, which again, you're like, well, how is that possible? I mean, it's not quite an accurate retracement, but I think, again, buy button removal kind of stuff, they pulled the plug at the right time is basically what happened. That's the reason why it works out mathematically so well. But it's not it's not really a question because this already happened. You can come back and look at the fixed volume range profile of the top zone here, and you'll see that the middle liquidity is like right where you would expect it to be. It's right here at like 29.5, which is the same place that you see. And you can see like there's a competing line there. Maybe the first time I did it, it was slightly different. But even still, like take it up to the next one. Let's just do it. My guess is it's right at that phase B bottom. Yeah, it is. It's right there off the phase B bottom. So this is a liquidity wrap. Like it's actually a really nice wave formation. So they're combing through the top liquidity. They're building up a liquidity on top. It is primarily to sell back down to the bottom. This is being used to get low where then you can accumulate shares. We already know, and if you don't know, you should definitely go check it out. But you should know that at this point, that is actually the highest on balance volume in the whole range down bottom is here in the low portion. It gets extremely high, right? And then it sells off like crazy hard. And you're probably like, that's because the shorts were selling it down. Look, man, you say whatever you want to say, but I'm pretty sure it was just a way of getting more people out of this. And again, there's this big bullish divergence on the RSI, but look at the motion here on the on balance volume. It was escalating this whole way up. So you may say, well, that doesn't mean anything, but it does. Could just been shorts. No, it couldn't have, because this formula is specifically Pitt's direction. So if this is going up, it means that there is an accumulation likely happening, and it was. Now the sell-off here might be then confusing. Why reset the sell? Why reset it? Again, you're trying to get people out. It may seem confusing, but if you think about like the amount of shares that's been built up, it makes sense why then this markup is able to happen the way it happens. And it is indeed like a 50-50. So again, like looking back at this, sure, there may have been one right here. We just talked about that, but there's also one right here, right, in this rotation, and then the continuation therein. Okay. So I did the same thing. I did the same thing where we are now, just to do it, because I'm like, well, if it is true that this is similar, or if not the same, maybe just similar. This is a bad chart for it. This is my marked up one. It's super ugly. So let me see if I can get rid of all the lines on here real quick, because it's really bad. Should be on balance volume. I did another one that's a lot cleaner. That's a better comparison, but that's okay. We can fix that pretty fast. This isn't the highest on balance volume has ever been. This is very flat by comparison. It is noteworthy. There is an interesting dynamic here, which is that there's actually quite a strong parallel trend. So if you look at the markers from this little action right here, which is kind of a distributive action. We are still, I think, heavily divergent in that sense because we're generating higher marks essentially on this parallel structure that we're in. I'm going to try to get this right, but you can't copy and paste in this, so I have to do it this way, right there, and then right there on the hook for the drop down. These are your ledges, and yes, there's another one, and we're basically like right on top of it right now. Right here, like we're right on it. So I looked at this and I was like, well, that's pretty cool because there's still like a macro divergence. There's still a really high RSI shelf. And we are doing an essential like reset. If you go back to where this is up here in October 2023. So just to really quickly on balance volume, and this is where we are right now. Look at where we are presently. It's really cool, right? Almost looks like a support being built. And then it's divergent. It's going up while this is down. This is still staying very elevated. And yes, this is very high. If you look at where this is on the bigger picture, this is very low. We would say that this is following a downtrend, right? And you can see these tops are downward, and you can tell that this is in quite the opposite. This is like basically sideways here. Okay. All right. So take that for what it is. That's the on-balance comparison for now. I'm not going to go any further on the on-balance comparison. I just wanted to point that out. I also want to point out that, yeah, it's possible. We're not quite confirmed yet, but it's very possible this 4-hour divergence holds up. Right now, we are lower. So we are sweeping below the floor, but we are indeed, for now, creating a higher low. That could change if there's a massive dump here, which is possible, right? If it drops to 226 or 217 or even lower than that, down to like 170s, like or 180s, who knows? Then we'd have to monitor this because it's not a guaranteed higher low, but right now it is. Right now the price has come lower, RSI on the 4-hour is higher. Right now it's divergent, just like it was in 2020. And then in addition to that, let's talk about this on balance thing. Let's talk about this. This is a tricky one because I think it's really easy to tell visually where it is. I think it's a bit challenging when you're grabbing it because it looks a little distorted, perhaps, due to all the volume right here. But it is a fairly straightforward analysis, which is if you look at the top range here, this portion that we would call like a wave, perhaps a wave top, right? It's rounding out to come back down. It's where you would expect it to be. It's at $5. It's a very simple number. Depending on how you measure it, believe it or not, it actually measures out, if you do it without some of this other stuff in the beginning, it does measure out to 485 at times. So I was like kind of curious because I remember 485 was a really significant level back then and we were using that a lot. So $5 without much argument there is the liquidity center. It looks pretty obviously like $5. We know that 520 is a ledge, it's a gap. And then ultimately, yeah, this did push over the top, 556. It went pretty high there, right? It moves over a lot of things. Maybe not necessarily creek jumps, but it is going pretty high in a distributive action, and it dumps beneath the liquidity shelf, and that's critical. The liquidity shelf being at $5. So it certainly is very similar. And yeah, indeed, we come down to the bottom, we sweep low, we don't make a lower low, but then we come down again, and we are doing a sweep right now. When you take this into consideration and you do the 50-50, I can't guarantee that we won't make another low. It's not possible for me to guarantee that because it's possible we do. But one thing that wouldn't be out of the realm of possibility, and certainly would be a good question to ask, is where is the 50-50 around 5 from that marker? It's already been used once when they did the first big up thrust, so it's not incredibly different from the first. But it's about $10.50, like almost on point. When you use the middle, and this is where things get kind of tricky, I suppose, if you're going to say things can get tricky. you would use something similar to like what we did in March, where you'd use that cross trend because again, that's the distributive action that's being used, at least for now, the directional movement of that. Arguably, that's already happened here. As you can tell, this created almost like a head and shoulder of sorts, and it already kind of walked down that motion. However, there is no retest at all after this point in time. So like you can see it visually. Remember how I said like it doesn't really look like much, the middle area. Just like in March, it's kind of like, yeah, it's there. You can see the direction on it, but you wouldn't necessarily have called this a trend or a creek. You'd have called it like what I would call it, which is like a cross, and it doesn't even make sense there because it doesn't quite hit the bottom. You know, it's all kind of like vague. You're basically defining everything based on this like little middle area right here. And the answer is yeah. I've been doing that for a while now because I know from what we've seen in the past that the behavior of this operator and this group of operators has been to use that to define directional movement. Doesn't have to be that I'm 100% right, but I know that I'm really close. And just like in August of 2022, when it came back up again, I wasn't 100% right. I was wrong about the second part of that extension. I thought there'd be two parts to that extension. I got the first one, which was to $25 to $27. The second part never happened. It dropped. And there's a similar phenomenon right now. Like we could run into that problem where there's a second part that doesn't quite do what we want it to do, right? We can't know for sure that it will or it won't at this point, but we can at least postulate and just try to figure it out. When you go back and you look at these extensions, and again, there's different ways to kind of interpret this information based on what you think may or may not happen. You can see they go quite far. I wasn't particularly surprised to see that they go out to about March 2026. This has happened over and over again, right? When we've done these trends, because it's like, yeah, there's some that are steeper, there's some that are not. But ultimately, they go out pretty far. January to March. That should sound very familiar to y'all because we've been talking about February 2026 for quite a while. But this is quite low, right? Isn't that like too low? Well, no, because if you look at the liquidity, it's at $5. So we're moving away from that. We've moved really far from that. A 50-50 around there is a big move, guys. It's like 350%. That's a huge move. But it doesn't take you to the moon. It takes you to like 1050, which is actually lower than the previous top, which might surprise some people because a lot of folks are like, well, this one's got to be like this huge thing, right? And it may seem disproportionate until you start looking at the setup here as it is instead of maybe as you want it to be and say, well, I don't know, man, it doesn't look like it goes high enough. It takes too long. Yeah, but this is slow. Another thing to mention is this Fibonacci, right? So certainly it'd have to be that couldn't be the right Fibonacci, right? I mean, it can't be the same thing. This is going to surprise you even more because if you do the Fibonacci like you did in 2020, again, I'm not being like perfect here, but I'm getting pretty darn close. It's going to be off maybe a few pennies here or there. The 2618 is $8.79. It is not a moonshot. It is not $30. It is not $60, right? It is pretty low. And another thing I would mention, again, just to kind of emphasize the point of all this is like, while that's true, it doesn't go as high. It does match where it quote unquote should be. If you look at the 1786 level here, and you take into consideration like where that 1786 is, if you look at where the top ultimately was before the breakout right there, you can see that this is like essentially like right along, if I can get it to kind of work how I want it to work here, because I'm trying to like mark it off correctly. It's doing weird stuff like lagging. Sorry, I was talking to myself, but you see this setup? Look at where the 1786, 1618 I think, no, that's a 1854, excuse me. The 1854, 1786, that's where the reaccumulation happens. So it's just positioned there. It is a really important spot on the chart, but it goes back to this kind of breakdown earlier. What are you going to do here, Booksy? Magic? I just want you to observe where it is, okay? You don't have to believe it or not believe it. But if you look at where this is, it is low, okay? And you might be saying, well, it's too low. It shouldn't be that low. Shouldn't it be right here, around $6 to $9? Well, yeah, if you look at observationally, where was this previously, this might give you a sense that, like, well, it should be around $7. That's where the reaccumulation should happen. But I just want to point out that it really is correct, because if you look at where this is at the top of the range. So if you have an SOS with a reaccumulation, it's kind of exactly where it should be. This right now, I can't see it perfectly. Let me widen it. This is 580. That's pretty much where it was the other day when I did it. It was pretty close, up to 6. So this is indeed in the right spot. What makes me say that that's the right spot? Well, remember, there's only one area here that hasn't been traded. So if you want to look back at this and take a look at all this stuff and do it yourself, like, go for it. I'm just trying to, like, breeze through kind of the basics here of, like, why this setup actually does make a lot of sense, not just for, our sake, but just for every bullish sake. Like, this is a really simple setup in a lot of ways. This is a very steep angle relative to itself. It goes very high, like I said, 350%. This seems low to us, but just go back and turn on your VRVP and look at where the liquidity gaps are. You should be able to tell. You guys are like, there's no liquidity gap at all. That's because this thing is broken. Sometimes it does this. I don't know why it does this sometimes. We're going to let it load, and we'll see if it fixes itself. All right. Well, it didn't do a very good job. I'm not sure why it's doing that, because I thought this one was adjusted. And I don't really want to mess up the number of rows. It should not be. I can't remember which one goes up. Is it that one? Yeah. There we go. Look at where that low liquidity is and where the shelf is. So if I'm going to go back and, like, play on the tops and bottoms, the expectation of this going through here may seem low at first, but then when you start noticing it on the bigger picture, it actually makes a lot of sense. This region, liquidity-wise, it would make sense for us to camp here for a time. It would. 50-50-wise, this makes perfect sense that we may end up coming up pretty far in the end, but this would end up being the top. Because remember, the 50-50 on the previous one, that was the top motion, which says 10 is the top. That doesn't mean you never leave. It just means that that's where the current top is. If there's a secondary action, then you get the secondary push-up. It maybe goes to, like, 30 plus or something like that. That's not what we're just trying to establish this as, like, a normal now. It's like, okay, that's pretty normal. When you look at this proportionally, again, bottom to bottom, and I'm going to take out this. There is another macro version of this, which I'm not really addressing at the moment, which goes to this concept, which is, like, when this was originally building out, did they have that in mind? Was it in mind that we would eventually come back to a middle? Well, the answer is maybe it was. And at one point I had drawn this out on the big picture to say, well, maybe this was this is a middle, right? This would be a cat ear structure right here. I don't want to get into the nitty-gritty details of that just yet, but suffice to say, you can see that 52 level is both the bottom and the top here. It's very flat. There isn't, like, this elevated pitch on that breakdown like there is in some of these places. I'm not using extended hours, but neither am I doing that down here. So this has this very elevated pitch to it. It's following that. This one does not. It's very flat, which kind of is interesting. It's noteworthy. And ultimately, it may make a huge impact as to how far this goes. Okay. What I'm going to do now is just show you, again, you might say, well, that's too low. That doesn't make any sense. Or I think that's too high. It doesn't make any sense. Either way. What I'm going to do now is just bottom to bottom. This is a really simple trend. I don't necessarily even think this is the best trend. I've used it at times just as way of comparison. It goes back to the opening value of the ticker, which is interesting. I think that's pretty fascinating. So, I mean, if you talk about, history, I mean, this is the opening value right here. It really goes all the way back to the beginning. Again, I don't necessarily think it's the best trend. There's other ones here that actually seem to be more impactful to me. This is important because when you go to the middle, this is the kind of the outermost portion of this creek, right? This actually signifies a really strong middle for the whole thing. And when you do the 50-50 around it, and I could have just done as you're probably thinking in your head, like, why didn't you just do why not just do, trend-based tool? Well, I didn't do that. This actually is your 50-50 marker right there. This would obviously appear to go over the top, so you'd have to question that. I could pull this up on the bottom. It really doesn't make much difference to me. Interesting, of course, is that if you pull this up to the place where there's the gap right here, you have a little bit of a sweep perhaps on this on the bottom and then a little sweep on the top. This actually looks like a sweep on the bottom because it cleanly goes right back above that and holds it right before the May run. So you could do that. That's fine. That would also require that you kind of shift where this middle is. But I wanted to point this out because these do touch an all-time low. They touch the low that was hit in the big COVID drop, and it touches the original open. And then look at where the middle is. Again, approximately, it's where we have that big shift, right? The big gap. We've gone through this a number of times. This isn't brand new information, all right? But I want to now point out this very, very small fact, okay? While all of that certainly looks kind of right, that's where the reaccumulation is. Notice these levels here, right, and where this is now set up. We just marked it off, this region. We said, it'd be reasonable to camp out right here, is what we said. Right, where does that marker come through? Right here. It's not really beginning with the end in mind when you're just using like the local information and the behavior pattern. Because we're using the local information and the behavior pattern of this to chart possible outcomes, but ultimately the fact that it is where it is, when it is, at that particular moment in time, and that it does match on the bigger picture, I think is very important. I think it's very important. Another thing to mention here is the length of time, and I don't think that that's particularly biased. I think it just is what it is. When we look at this, the length of time spent, that's another really key part of this that's important. This is extremely long-winded when you compare it to those waves in 2021. Very long-winded. It looks like it maybe is almost done. We can talk more about that later if you want, and I could talk about where I think those numbers are. But nevertheless, if that markup happens rapidly, which it probably will, it's tempting to think that there's going to be more here, and it's possible there's a little bit more in the middle that needs to happen between about maybe 350 and 4. But other than that, remember the point of this was to really accumulate across the whole range. And they do often leave the middle a little less traded. That's normal because we tend to trade off tops and bottoms. In this case, the middle here, which is kind of elevated back in 2020, does have a lot of trading because, again, it's more like the middle of the middle, right? That wasn't traded a lot, but you get the point. They've already accumulated shares up top, distributed shares up top. Now we're doing the same thing down bottom. We're checking liquidity, and I'll pull up that liquidity chart in just a second. I believe I have it saved on here. My point being, like, the time it takes is debatable as to how quickly it moves up, but I would say that the rough amount of time it takes in that top region is not as debatable if we consider how long these took proportionally in these waves back here. They're very similar, very, very, very close. And I think that you would do the same thing here, and these are just longer. So even if it took off and left tomorrow, right? There's no way you're gonna go anywhere until for a second move. That is, if there's a second move, you would not expect there to be a major second move until almost June 2026, which is kind of interesting. So the time it takes is significantly longer. We were saying, well, look, man, if it takes that long to get up here, and it doesn't even get up here until January or March, and that's just the first move, how long is it going to take? It's going to take a long time. You're looking at August 2026. I've said it repeatedly, like, I don't personally want to be in this trade much more, and I'm kind of sick of it, right? It's already absorbed a huge amount of my time. These are in the right positions. They're in the right time, but they're their own time. If you're using bars patterns to measure this out, it's not going to be accurate because the angles here are significantly lower by comparison. The wave appears to me to be slower, and that's okay. Also, even though, again, this may be somewhat debatable, I suppose, though some of these are very similar, and they are, ultimately, like, even if this were to go kind of parabolic up, it does not appear that you would exceed the areas around like 50 to 52. And previously I had talked about maybe hitting like 60, 64 again, just almost like a rinse repeat. We are starting from a lower number, presumably, in some ways, and we're significantly lower. There's a separate range here that we have to think about, and then there's different tops. It's a different setup is what I'm trying to say. And again, going backwards, it's like even if this went like super fast and just went straight up into December somehow, the top would be around 50 something bucks, $60, and it would be right here. I mean, you're not going to go much further than that. You're just not. Well, what if we break out? Well, what if, right? Most people that are doing this are probably drawing this marker right here. And again, this should not surprise you one bit that is where it is, that it's essentially in the little box that we have right here. Like, if it's going to go, it's got to cross this region. Maybe it does it way later in the future. None of this is right, sure. But if it has that model here where this break back up happens, just like it's happened repeatedly on AMC, really every single time, I can't find an example where this didn't happen, at least in the last few years. That's still the key zone, which is established when they dropped it down. I think that even looking back at this and just saying, well, you got the creek wrong, man. It's way over here. All right, fine. Use the two top points. It doesn't make any, you see how that's the same, it's the same area, and it converges in April 2026. And I've been saying for a little while, February, because that seemed like that's where a bigger part of that wave converges. When I did the wave, and I've already shared this chart, when I did the wave schematic here, I kind of, unfortunately, I mean, it is unfortunate to some degree. I did come to a conclusion that a lot of people are probably not going to like, which is that, yeah, this does follow itself really well. If you go to the directional input from the original opening of the stock to this very first trend, aside from the weakness that is here in the beginning and then the subsequent breakdown, that is where it goes in the end. It's very clean. It does indeed follow its own rules. It doesn't even pretend not to. Like, it clearly was targeting like this region, even as it's like walking down, right? You can go back and look at it and be like, well, slightly different. And yeah, I mean, it's all slightly different, but the trajectory angles here are brutally similar, like all throughout. The wave trajectory here, was it always going to go there? I don't know. Maybe there was a different alternative to that path. I really don't know. I can say that with relative certainty, we know because we've seen it before. This was 35. This was like 72. This was basically like a 50-50 markup in terms of numbers, at that time. And I think that when you look at the, like 100% is what I mean off the top here. When you look at these kind of 100% moves or these doubled up moves, it sort of follows its own rules. It's not perfect. Anyways, I took this into consideration and just looked at big picture, like where would this go if that follows through and there's a similar motion here. And again, not surprisingly, we find that that's where the gap opening is right after the split. At least in terms of that angle, that's where it is. It's also where it took off from here in January 2021. So from the time it hit the bottom, right, to there, where is the intersection? It pretty much follows this marker up. And it does not exceed like $30. So I have every reason to be grumpy, just like anyone else, to say like, well, shouldn't this go way higher than that? Yada, yada, yada. No, it shouldn't. Because in theory, when you look at this overall move, and I already talked about this in another stream, but if you look at the overall move, this is just a macro wave setup. And we would be pretty fortunate to see this kind of mark up and over time, like get up to $30 if that's the goal here. It may not be as slow as I'm presenting it. Like I can't, again, validate for 100% certainty that that's exactly where it's going to be at that time. But in terms of wave formation, that is pretty accurate. I mean, you're going to spend about as much time in this bottom region as you did in the top region. And during that period of time, if you were to have a markup here and it kind of works its way back across going into, and I'm kind of fudging where those numbers are, all of that looks pretty fast to me. And most people at this point, you're like, well, why wouldn't it just go straight up here? And da, da, da. Yeah, I mean, there's a lot of question marks. Maybe that does happen. Maybe the breakdown is over here. I don't know. That's too much prediction, over time. The point is, the wave markups right now, as low as they may seem to us, they fit very, very well with the bigger picture, and they don't present problems to me. I think they just present the same challenges as any other chart. If this does have a move up, it may not be astronomically high. It may only hit 1050, and then it may come back down and really needs to build itself out again quite low. I mean, we're talking about the possibility that this doesn't even break out until August or perhaps as early as June. But this to me doesn't really ring as untrue just because it's not favorable. This actually rings as quite a strong possibility because of where it is in the grand scheme of things. This makes a lot of sense to me timing wise. It's just slow. And it also follows through with earlier anticipations of where these markers might be. Now you might be saying, well, that's on top, that's on bottom. Draw it in the right spot. Shouldn't this be like way up here? Shouldn't this be hitting, 19? Yeah, maybe. But again, like I'm using these trajectories, and some of them I'm giving more priority than others, basically is what I'm trying to say. I'm not convinced it's going to go significantly higher, but sure, it could. It could come up to $15 and then drop back down to like sevens. And I had, again, folks were saying, well, what's the deal? Somebody said in our Discord, like it's garbage or something, or it's trash that you think it's only going to go to like $5 to $10. And I'm like, that's where we were here. I don't know if you guys recall, but this was like $9 or $12. This was not, at first was not like this humongous $72 run. I mean, that didn't happen till later. So conceptually, like this is very similar. And when you're looking at the 50-50, it's very similar. Like that's the marker right there, that's halfway. It's not at all outlandish then to suggest that that's pretty much where the liquidity is trying to get to here. They're trying to anchor themselves so they can do like a wraparound. So just like what we saw back then, you would see something similar where you're basically going to come back up and over and then land on top. Just keep it simple if you want to keep it simple. I don't really care. You don't need all the numbers to know that that's probably where it's going to end up during a markup phase. Well, we could mark up twice or just bleed through it all. Maybe, I would say that there's a ton of liquidity left here. Perhaps if it did do that, it would come back to here and use this as a shelf later, long term. Maybe long term 6 is going to be a shelf. We would just be talking through our teeth at that point and just kind of making it about whatever we want it to be about, because there's no real reason here that anybody should expect it to necessarily break this beyond just wanting it to break. Because I have not found a good technical reason to break here. Like, this to me makes perfect sense. Going beyond it, you kind of have to just say, well, I just think it's going to happen. And then if it happens, okay, it happens. Then you can measure it from there. Sure, go forward, so on and so forth. But like, there's not really that much indication. I can't find very much that indicates it would go super, super high, super, super fast. Well, it'll be uncontrolled like this was. But this wasn't uncontrolled. This ultimately went right back to where it wanted to be 2 years later, from May 2019 to May 2021. I mean, it's back to the same level. What about this? Because this came all the way back up to the shelf and it sat underneath it. Shouldn't we go all the way back up and sit under 53 and then break out? Yeah, we can get into like lots of fun stuff. And eventually you get to this point where you kind of run yourself into corners, because you're going to find different angles. And most of them do support what I'm talking about, which is around like 8, maybe 6 to 12 kind of extensions around 8. But I don't think beyond that there's a whole lot of evidence for anything humongous, unless it's just people saying, I think it's going to do this or this. This is a 50% retrace right here on this move. And even if you did a 618 retrace, it only goes to like 15 or something. Like, it's not way, way higher. So the idea of a markup here going past this top, that's something that you just have to take it and run with it, and then decide that what would happen after that. Maybe I'm not going to question that. If it goes up to $19, I'm going to be like, okay, that was a target that I felt strongly about, the 1960, and then we'll see, if it sits there, okay, we're doing something higher, we're doing something different. Again, I'm not likely to be here for that anyways if it hits 19, so you do whatever you want to do at that point. You're going to have to make those decisions. I'm purely just here to chart what I think is likely, versus maybe what seems to me to be a little bit too much. So let me see if I can get the liquidity chart on here. I don't know which one is which. That one's a weird one. That one's really similar to what we just talked about. The angles are slightly different. This is a measured approach. I'm just doing, it looks convoluted, but it's just a measured approach to the exact same concepts. And again, there is an extension possibility here. It goes as high as like 1960, but then most of the targets were between 8 and 1050, and then consolidation around 6s. This made more sense to me for a number of reasons. Again, when I did the math, just measuring it out, this has a very long-winded approach that doesn't leave until August here, but ultimately would have an early move, possibly as early as November 28th. I find those dates to be skeptical. I find very skeptical of those dates, because some of them are like November 28th, and then some are December 30th, and some are, January 30th. It's like, those are really dramatically different. And I did mention that after October, I felt like, it could be quite a long ways off, because it runs into some problems. So, I'm not seeing the liquidity chart I made. That's not good. Maybe I lost it. Or it's on a different chart. That's possible. It'd be nice if I didn't lose it, but I probably lost it. Oh, no, there it is. So it would have been really nice if I had not lost that chart. So this is maybe a bit different than some of the other stuff that we've done, but I did try to incorporate certain ideas into it, so it would be simple enough to understand. So on this one, I wouldn't be mad about that either. I mean, it doesn't matter to me. This was a way of understanding this based on liquidity zones, and I was asked about that because someone asked, well, why would a sweep down be good? And I was saying, well, because it could signify, not always, because it depends. If it's a markdown, then no, it's obviously going to go down below the range. But my point in saying all this was like, this is at a termination point. I think it's a really significant termination point, and it should have a change of direction because above here, right, this is your major resistance. This is your markup zone. It's above 560 roughly. And then on the lower end, I would be hesitant to say it's definitely like the bottom at 238. I really think that it probably is more like 260 was really where that liquidity is, and that most of these are just dips below it. We built a lot of strength and support around 295 here. We went sideways along 295. We anchored on that, pretty much on that 291 bottom that we made back in May 2024. But this would be a way to understand sweeps if you're not quite understanding why sometimes you go up before you go down. The liquidity checks here are really clear when you break it into zones, because you can see like it sweeps low below the liquidity zone that you're going to ultimately trade in even later. Remember, we're kind of wrapping around 291. We're not wrapping around 238. We dive below that, and then we push above it. And you can see like anytime there's a direction change right before we go down from, for example, here, 580 down to $4, we have these two up thrust, down thrust motion. One goes over the top of 560. The other goes below right here, the 470 region, which is kind of the upper range, which was established on the way down when they marked off, these levels coming down. We were walking through them. Same thing here. You dip below $4, basically. You're going down to like just slightly below there. I don't think it ever dips quite below 4. But it's going down into that lower liquidity. And if you go back to the previous area, it's like 406, which is interesting because then later when we come back up, we hit the higher marks, like 406 to 410, not right at 4. So this does indeed dip below that shelf, and then it comes up high, goes back into the upper liquidity. It literally sits on that mark here in the middle, around 485, and then it dives back through. There's the hook right here. So this is your liquidity is satisfied, it's moving on. You start with this high check, then you kind of bounce back and forth. It's a simple like 1, 2, 3, 4, and then down. If you want to count the waves looking like that, you can. You can see the directional changes come when there's these sweeps. So then I was just marking off, showing where those sweeps are. This is another sweep low here, and then immediately comes back up to the top. This is kind of a squishy middle, as I call it. This is not the area that you typically trade in. There's a lot of pass through here. So there's a lot of buying or selling to move through these areas quickly. This is the peak selling period. When we came back through this in January, it's the peak selling period on the 4-hour, us outside of the original walk downs here. So this is extremely important. It's also a peak buying period. They're passing through it, though, for the most part. There is a lot of shares trading hands, but they're trading hands very rapidly and at high volume, and you're just moving through it. You're not spending time there. And again, these are defining like same tops and bottoms that have been marked out the whole time. This sweep right here, very important, I think, because it signifies, again, like this concept that like, well, we've already kind of checked the tops here. Now we're going to go back down and check the bottoms. This is the last point of supply, essentially, on a walk down. If the liquidity is satisfied, it will move on. just like here, you go back up first before you go down. This is the second big motion up. If you notice the general movement here, it's again that double top motion. This is a double top or double bottom motion, right? So the inversion here is very important, but the big picture is like, look at where this starts on the top with a sweep on the high. Then it stops on the top region with a sweep on the high. It starts the bottom with a sweep on the low. It should end the bottom with a sweep on the low. And I don't think there's any doubt it's doing that. It's gone below the floor. And the 246 has been broken, as has the 239. So when I did this, I just did it measured wise. I measured it out to the farthest that I could, which was the February 24th middle, as I see it. That's probably the most extreme as I can go. I think the earliest I could go was February 7th. It's not actually right here, because even if you do from top to bottom here, it's like February 7th. So sweep to sweep. I went with the most extreme so that I could kind of see what it was measured wise. So that what you're seeing right here is essentially like a time-based measurement. And what I found was if you go from the initial high in 2024 in May, which was around the 15th or whatever, and then you go to the second one, which is in December, if you take that measurement and you just copy and paste it onto the bottom, there's only two potential outcomes. One would be going from the low in April, and the other would be going from what I was talking about, the May 5th bottom. Those are the only two. Well, the low in April, we'd be behind, because technically we've already spent that much time down here. That was back here in October on the 28th, which on one hand, I just kind of take it for what it is. It didn't happen there. On the other hand, it really irritates me, because I'm like, well, I don't know. That's the same amount of time. So we've already spent more time in the bottom region here than we did in the top region. Granted, we do have this extra bit of time here that you could add on, and this extra bit of time here that you could add on. Maybe that's the difference, right? Is that we really aren't done because there's a little bit more time that needs to be had. The other alternative here, which is just to use a different bottom, is to use the May bottom. When you do that and you measure it out, this ends on November 26th, not on, which again, I'm saying that that's a possibility because that is where it bottoms out here before reversing and ultimately breaks that creek. This is the first creek jump, yes, and it bottoms out. This is the second creek jump, it bottoms out. Both are valid as possibilities of where that change of range direction may be. So you can see all of this is kind of downward until then. So that's why I'm like, maybe it's May 5th instead. And that's at 258, by the way, which is an important level here. It is being used a bit, but I'm not convinced of that. I just have it on the chart because it's the longest one I could use right here. That seems to end on November 26th. So the concept there would be that sometime between the October and November, that month, you'd hit this middle. And I previously had found a pivot on the 13th, which is coming up. It's basically Thursday, Friday this week. That suggested that the 13th might indeed be like a low pivot because it technically intersects high at like 891, but I've seen that too many times at this point to kind of assume that it's going to hit there. And the pivot itself was on the 13th of November. I believe it's probably a bottom pivot, not a top intersection. And that was a more recent chart that I had done. That makes sense. It's kind of smack dab in between that range, between October 28th and November 26th. I know you guys are like, well, what about the December stuff? Because there's December GME earnings, which is around the 3rd, and then you also have the December vote for dilution for AMC on the 10th. I don't know. Maybe they'll play a big part of it. There's also a Fed meeting right around there in December. So there's all kinds of potential catalysts, I suppose. But, GameStop has run into its earnings as many times as it run down into its earnings, and it often sells off at earnings. So it's like there's a certain I don't know what you'd say. Non-pattern pattern there. Like it doesn't. Its inconsistency is consistent in that the ups or downs don't matter as much as just sort of direction at the time. It does tend to follow through on its direction. AMC's had historically less great earnings, more sell-offs than not. But again, sometimes it runs up into them. It's just it's a question mark. And I don't find it to be consistent enough to use as I think it's a terrible catalyst event for AMC. I cannot find a lot of this. You guys are like, what about May? Yeah, but then look the dozen around it, you know. They weren't catalysts for good. They're catalysts for evil. No, they're catalysts for shorts and for selling. I mean, so it's a very divisive, I think, approach to it. I don't particularly hold a lot of interest in talking about that. But I think that on the whole, whatever happens between now and March, and that's fair enough to say. And then there seems to be a narrow window here of possibility. So this is as far as I could stretch it. If it did happen to be 1-to-1 in terms of speed of the move, it would get to wherever its peak is by roughly the 30th of December. So again, this is a little inconsistent with some other things. This is kind of the nature of the chart right now, right? And I'm mentioning it because while this stuff to me seems extremely simple, it really does. It really seems very simple to me. It's going to go somewhere. We were right. When we were going into October, we knew it was going to make a decision. The pivot happened literally like on October 3rd, but it pivots down. It goes low, breaks through some trends that it has going, and then it goes into a sweep, which is a low grab for liquidity here. Inversely, when this double top happened and you get the double sweep, if you use June, it's going to look really different, but if you use the May run, that would be like kind of the big sweep to the upside. And then the secondary one in December, we've approximated the same amount of time here, which is very close to how it was in 2020. And a wave would normally do that. Okay? It just would. So if we're able to satisfy the range here in the amount of time that we had, and we're pretty darn close to the same amount of time right now, then there's really no reason to expect that it's not about to happen. The behavioral pattern of this operator has been to use that initial distribution to get down low, buy it up, and then take it back up to sell off, usually at a particular angle. We know that that angle does indeed match quite nicely with what we see here, right? Although perhaps, we might be a little bit off. There's imperfection in our attempts to, try to get everything perfect. Sometimes it's going to be like this guy right here. You can see if I connect it across, it does go through, of course, the middle here, but then notice like it's not quite perfectly on that intersection that we were looking at earlier. So it's like, well, one is it? Which one is it? I don't know. They're like not even a week off in the end, they're super tight, but it's a question of how do you decide to measure? You measure from the bottom or do you measure from the middle? If I measure from the middle, it's a little earlier. Measure from the bottom, it's a little later. The point is the parallel is basically the same, and that's important. You may also be wondering, like, well, what about the idea of shrinking? You were talking about that at the beginning of the stream, and you kind of left it alone. That plays a big role in this as well, because typically what we see, although not always, is that this does indeed play a role in like where those cross-ups happen. So when you get to AMC and you look at the two bottoms that are made, this one's quite curious, the one on April, because it actually, from a creek standpoint, I suppose you'd call it like an ice or something, it actually dips lower afterwards. So if you go to like the April 30th move down, it's really hard to tell on my chart, but that April 30th move moves the parallel down, which is kind of strange. So I don't know if it's a check, and then it's in a different spot altogether than the May 5th bottom. So it's a question of like, which one is it? I don't know. Pick one, go with it. It's not going to be dramatically different. One thing that always is interesting is like, where is this? I do think this is really important. this is very significant to me because I'm like, where would that be in the scheme of things? Because if this is an iterative motion as this is, and I believe it is, I think you can visually see it. I hope you guys can visually see that. You know, you can see this push up and this drop through. You can see this push up and this drop through. You can see the attempt to come back up even here to this $4, this attempt to come back up even here to this like 320. You can see the iterations like playing out in front of your eyes. So you can see that directional motion here, right? And how that relates to the directional motion there. I think that's an iterative motion going down. What we would then expect is to have some semblance of like continuity in the downward overlaps so that they become sensible, like basically. Where when you're coming back out, you should start seeing those movements back to the upside. So going back to kind of where we were before, you can see this is like a squishy middle here around 360. That's the danger zone. That's the place that if you're going to break down, it's probably going to be there because this would put you back over this top that we made in July. And it's like, if you think about this as like a wave schematic, you don't want to come back up here and reject. But that is exactly what you see on, we'll call it the cat ears again, is that when this rejects, you almost always come back above either this particular top or this particular top, the second two tops, not the buying climax, which is up there at like 4, but usually it's one of these two. And I see this quite often on AMC. If it does have no desire, and again, there's usually a better reason for it. This is kind of a silly explanation of it because it's not, you know, it's not necessarily going to make sense out of context, but this is almost always what we see on the distribution walk down. And we were just talking about this before with that ear and the interaction in the middle and then the push back up. We do not want that to drop there. That is right in the middle of the range. It's the most dangerous zone in the whole thing. We've barely ever spent time there, but it's noteworthy because when we pass through it, we should just move to the next top. So the idea of us passing through this area from like 350 up to 4 is very significant. It's middle of this parallel, and the next one up is way up there at $8, which is consistent with what we just talked about on the macro. It's all very like tight and neat and orderly. And then the liquidity range that you want to be in right here. So it kind of puts you in the right position for this. It's a 50-50 of sorts layup here up to the next range up. All of it works quite nice. Conversely, this is also the place where you've distributed from more recently. So if this does not hold, then it is indeed potentially very dangerous. Now you might be saying, well, couldn't this come back down and do what it did back here and reaccumulate again going into like January, and then we have like a January markup? It is not impossible. However, the whole purpose of this, the premise of this, is that when you're coming back up the first time, you did this because this area is unexplored. You accumulate as little as you possibly can, and then you take off. So this is a huge downward sweep, right? Then you accumulate some and you take off. We have already spent an enormous amount of time in this area. So while I do think nothing in the market is impossible, the idea of this kind of chopping in the 3s for another extended period of time, it just doesn't ring as sensible to me. I'm not saying it can't happen. That would be silly. You guys are like, well, why not? We spent so much time. Because again, when you already went down low, which we did, you might say, well, this has to be the upthrust before the big drop, right? You said there's often an upthrust and then there's a big liquidity drop, right? It's going to be that December 10th thing. It sends us into a spiral down. And then that's when we're going to finally get the buy up. I'm not saying, again, it's impossible. It's just that it really wouldn't make a lot of sense here to like reaccumulate, I guess what I'm trying to say. It makes more sense if you're going to do this. Maybe it's part of a sell-off motion, because I just don't know why you would do this after going low. Why would you stop here? Like, we've already heavily traded this region. It almost makes no sense. And if you go to like 2020, it's actually a really great example because there is no like secondary action, you know? Like this would be like the comparison, right? Would be someone back here suggesting at this time that it's going to come up here and then chop and accumulate in the same place that it's already accumulated like multiple times. It just doesn't make sense. So the first time you came down here, yeah, you're going to chop through it and get as many shares as you can because you're not staying there. You're going to immediately back up to the top of the range. But you've already spent an amount of time down here. Once that range is satisfied, the primary action, and Wyckoff knew this, and this is what Wyckoff-ian people use all the time, like primary action here is bottom, as soon as you enter. Primary action here is top. It's leaving. It's not, we don't spend any time in the range because it's already done. You've exhausted every part of it, basically. You don't want to trade here anymore. It's illiquid, as you were. It's as illiquid as it's going to be during this time. And you're usually just going to pass through it. And then maybe later, year down the line or whatever, you come back, you trade it again. But it has to be, with a different set of eyes on the stock. So for me, I'm like, look, this kind of makes perfect sense, like liquidity range, how these sweeps have happened, why they've happened, the shakeouts, the, trapping of shorts, the trapping of longs, the swapping of shares from weak to strong or strong to weak hands, all of that stuff rings true. What doesn't really make a lot of sense here would be like another accumulation. It just doesn't make sense. So I think if and when it takes off, if it stalls out around threes, I'm going to kind of have to just take that. I mean, like really stalls out. I'm not talking about like a backup for a day and then go again. I mean, if it like really stalls out here, I'm going to have to kind of just take it more bearish than bullish, at least, until it proves otherwise. Because I cannot imagine why you'd reaccumulate here if you're going to walk out. Like what could possibly be gained by, it just doesn't make any sense. Oh, they're just going to hold it till well, I don't know. I mean, we just start getting into all kinds of like mind reading tactics, which never goes well. We don't know why that would happen. It doesn't make sense. The only reason I can think why something like this might happen like this with repeated up thrusts would be to distribute, to like make you think it's going to go and then yank it the other way for like a real, quote unquote, real spring, right? Or maybe, I don't know. That's a huge change of character either way, because it's altering the trajectory here. Full circle. I went back and I looked at this and I thought, well, if this is indeed attached to a similar function, then it should make sense. There should be something kind of reminiscent. Maybe it doesn't have to be one-to-one. GME is its own chart. It doesn't have to be one-to-one. But it should be reminiscent of like similarities in terms of like how we're moving through this, because if AMC's got the liquidity grabs that are going on side to side right now in this huge macro downtrend, and it's kind of at the bottom of a wave function, GME could not also, I don't think we would be willing to say that for somehow that GME is the opposite, like GME is going to go down or something. Just doesn't really make sense. GME has always been the stronger of the two, GameStop, and it definitely feels like the more obviously fundamentally stronger of the two. So I started thinking about big picture, like if this is at a bottom and this was like a macro top, it could make sense because, again, if you think about the amount of time spent, although it is minimal here, it's starting to rival for sure where we are now. I think there's a certain balance there, but there's also continuity in this walk down that I find to be quite appealing, which is, again, even though AMC is on a downward trajectory, these motions, these backup motions here are more horizontal. In this case for GameStop, they are following very neatly. If you use the parallel structure down, they're following kind of backups very nicely. So what you see as a backup here on GameStop that goes back to $60-something here from November, you do see that same motion right here. It's just super slidey and down and shifted. And you guys are like, well, yeah, but then that's just like one thing. You can't just, no, but like keep going. like then observe where the markers are at different times. And you can see like it is obeying what seems to be its own rules of its own chart, which is again upward, downward. But downward in this case is still pretty elevated on GameStop. And then those backups on AMC look so bad by comparison because AMC is on this sliding downward motion, whereas this is more horizontal. And again, I already did that in a different chart. Anyways, I went in and looked at this 50-50 reduction. I built it over here. I checked it out from here forward, okay? I did just verifying, is this still here? Is it using it? I think the answer is yeah. Any kind of a push above one of these is met with some kind of a push below. So like the sweeps up and down, though they don't always make perfect sense. This is like a double top motion. This is like a double bottom motion. They, again, are moving in logical patterns. You're kind of checking above to see if you want to go here, right? That 50-50 kind of motion down happens. You're passing through a middle, and then you're checking low, liquidity test low. It's not perfect, but I don't really need it to be perfect. I'm just kind of observing it. I noticed that this indeed does seem to be true. Like it hit off of this one particularly and then moves right through the next. And I was thinking about the layered approach, like what's happening on AMC versus what's happening on GameStop. And we were saying like, well, isn't there this like iterative function here? And I think, yeah, there is, because just like on AMC, there's a motion here to kind of back up to the previous. And each one of these is checking the next. This is kind of a weakness, right? It's checking and it's going back up to the previous. Well, they all look like they're kind of off. Look, man, if they're off, they might be off because the angle's a little wrong or because my lines are in slightly wrong place. But I don't think they're really off. Like I genuinely looked at it and I was like, man, they look right. They're interacting in the right spots. These two particularly, really, really close. And I don't immediately assume that just because it doesn't hit like on the wick that the trend is off or that the parallel structure is off. Sometimes I think it's just because we didn't get there. So just because it's not matching every single wick bottom, in my mind, does not signal that it's necessarily off. When I went in and I looked at the nitty gritty, this is really where I'm like, yeah, it looks pretty dang close. So this is really interacting very strongly at this point with the May bottom, pretty much to the T. Like this is one of the hits. I'm pointing to it with my mouse. This is one of the hits. It's all really nice. But what I would say then is that, well, is there a outcome here? And is there a sweep here? Yeah, I mean there is, because GameStop made a bottom on the 13th of June, and it broke through that. This is a range right here that has been lost. Now, this would have been considered, in my opinion, I wouldn't even necessarily consider this part of the range. I would have said that's more than likely more or less like a, it's like this, right? Where 22 is really the range bottom. This 2150 is really, again, like a selling climax, and then it recovers and it finds plenty of supports leading down to like 2195 or something like that. It doesn't go lower, though. It doesn't go back to the selling climax. But this is certainly below those markers. And in addition to that, where is it on this structure? It's on the bottom. When you look at, this is what made me this is actually what made me start the whole thing, because I looked at these two lows and I looked at AMC and I was like, well, AMC's back to where it was in April. It finally came back down. Is there an equivalent to that? And the only equivalent to that are these parallel structures, and they work. Again, going from a reductionist standpoint here down, this would be the same path traveled, I guess is what I'm trying to illustrate. So then you get to this point of, well, what's the continuity here? Like, why bother doing all this? Again, when you look at this structure downward here, and I'm going to put an arrow on it, and then I'm going to bold the arrow so you can see it. When you look at the structure downward here, at first glance, you may not feel like they're like perfectly one-to-one or something. Oopsie. Don't want that one. Old school. Ader. I got a lot of crap for Ader. This is the guy that picked Ader. People threw that back in my face for a long time. That was when I was still doing a lot of fractal stuff. I agree. I didn't do that one right. Too much of that. This motion right here matches. I'm not kidding when I do this. I'm like, I know it looks like I did it on purpose, obviously here, but I'm just showing you like this is the same creek that was established on the top in June and then the top in January. So like when you look at that directional motion down, and this goes all the way back, to like near the beginning, it's the same drive. So it's the same directional drive down. We could go through the nitty gritty of it and try to figure out exactly where that's supposed to be, so on and so forth. All I did is like put it on the June top and let it go where it went. And it's right where we are now. So directionally, like, this is pretty solid. And if you look at where this low portion is and where our low portion is right now, I'm like, okay, I could see that. Now you're going to accuse me of using fractal nonsense again, but I did check out where those levels are. I looked and I said, well, there's a liquidity shelf here that was established before the drop-in, which is around the yellow marker. So I changed this to yellow. The same thing applied here because there's a double motion up towards the yellow marker. Again, I might be like slightly off with where that's actually supposed to be. Maybe it's not a 50%. Maybe it's a 60% reduction. That would change a lot of this stuff ever so slightly. But it's very close to the same spot, which would be 32. There's also a drop ledge right here at 30. And if you look at where that is, according to where this chart is now, on the opposite side of the creek, because remember, the creek's right here. Like, that's the most extreme you can draw it. It's from the peak at 65 to the peak down here at like 36, roughly. That's where the creek is. If you look at where we are opposite the creek, like that's the marker where that ledge would intersect. It's a triangulation. It's where it intersects the yellow mark. That's exactly what happened here in 2024. So I'm using a shelf in the same way, but I'm specifically looking at like, where is the drop ledge? Where is the liquidity shelf? It's right there. It intersects where it should in this particular model. So all I did was, excuse me, I looked at the bottom. They don't look like they're parallel right now. I think I did them on a different time frame. But I looked at the bottom here, and I drew one parallel, which was down low. And it's just a simple hook parallel here. I copied it, copied it, copied it. I copied it backwards to the beginning even. And what I found was that it seems to be very much like a one-to-one parallel. It seems to be actually quite close, if not exactly like the original one. So then what I did is like, all right, well, let me just map it out, because this, you can kind of identify like where these pockets would be. Like that should be here. That should be here. Where is that? When you look at it this way, it's actually extremely clean, because this should come up. It would fill the gaps at like 30. It would break at 32, which is that warrant value, which is the top of the range. I mean, it is. Range goes up to, I know, like 35, I guess, at the peak here. But it's like really anything above that 33 to 34 area is potential for a run. That's the top of the range. So that's like AMC. I mean, in some ways, it's kind of like AMC running up to 520 or something, or at least 4, the bottom area of the range, perhaps more accurately. That marker would be roughly around November 21st. The second marker is the big backup, and that's the one that I'm using right here. That's a May 22nd. That's roughly around December 10th, which I also think is really interesting, because that's the date where it's like 44 to 48 right here, which was the first level that we had gotten, and the most common level that we had gotten was the 44 to 48. And it goes 44 at max, 54. Another intersection were the November dates. I don't want to get too into detail about that, but I don't know if you guys knew this, if you didn't catch the stream, but November, they're backing up. So the November dates are in a straight line. It's basically this line that you see right here. They're in a straight line coming down, and thus far they're in a straight line going out. There's only 2 points, so they have to be. But the next one would be up there at like 50 something in November on the 20th. I know it's crazy. You guys are like, well, it's super far from that. It's never going to get there. And I'm not saying it has to. All I'm saying is that it's freaky because this November date that occurred right around this like 20th area, around $28. If you go over to the other November date, it's the same. It's like the exact same numbers. So they're basically like a V shape here. So if it goes to the next November date, which is over here, which is the 20th area, that's like 50. That's like right here. Maybe it won't happen. I don't know. It's just an observation, but it is interesting. That actually is in line with this current mock-up. So granted, this would go extremely high, potentially doubling. But what's curious about this, and I find this to be most engaging, it's not an iterative move. An iterative move would only go if you shrink the next move down. Just like if this was a shrinking of the previous move, it would only go to 44. Okay, I've kind of talked about that before, maybe 48. It wouldn't go any further. That's actually like a halfway point because it would be like a small reduction of this move here. And then you'd chop again and do it again. But what's really interesting to me is that if you look at where this bigger move 50-50s, it 50-50s at 48, which is kind of bonkers considering that's where the creek is right now. It's literally like a 50-50 around the creek, which is extremely tight. Again, that doesn't mean it will happen. You can't say that. I can't say that. But it is very, very, very nice. The fact that the current setup here, if it happens to be the same, does indeed give you a 50-50 around the correct creek. That is exactly where you'd expect it to kind of blow up. And if you go back from a liquidity standpoint and you look at where that top was in June and the top right here, notice where they are, again, in accordance with the bigger picture. I'm going to use like the halfway point for that one, which is hard to see, but it's at like 64. I'm going to make sure this is about right. That's 65, a little bit lower. 65. So the bottom comes to like that March region right here, which is very close to the low end on this side. The top comes pretty darn close to that 85 mark, which is the previous top here from way back in March and June 2021. So it's not March 2022. Now we're looking back at March 2021 tops. And I don't know if you guys recall this, but the Bukowski measure on this wedge was actually 85. And it only gets to $80 in extended trading hours and drops. So if it hit $85 here, I would say Thomas Bukowski got it correct. Because the measurement from this wedge down, that projection was like 85. I said it at the time before it broke out, and I was like, well, it didn't get 85, it only hit 80. And then we didn't even see that. We saw 65 when it opened. So it is a lot of potential right there, I think, to recheck these levels. Based on the parallels alone, if this were to kind of hit the same parallel, it would actually hit like 137, which is higher than all-time high, which is now like 121 or something. If it only goes to the middle, which does seem likely to me, because if you split the difference between these two tops, again, same structure, but just looking at this middle, remember this is the cross I talked about in the beginning. I told you it would come full circle. I'm just doing as best I can to explain it. The middle of that is actually more accurately where this drop ledge is. I think it's a more solid center mark. So the center of these two motions right here are actually kind of grabbing around it. They're not actually hitting it. They're equal parts on top and bottom of it. And the bracket there, if you take the middle, that would be around 113. And if it hit specifically like right at the all-time high, that's like January 15th. Okay, now those don't mean that you're going to definitely get there at that time. Absolutely not. You couldn't say that back here either, that you knew exactly when it was going to hit. You can get pretty close, but you could never say like 100%. This is this is actually very similar though timing wise. I find it to be very interesting. So if it ends up being the same in terms of timing or very similar in terms of timing, that's possible. Now you might be saying, well, how in the world could GME go that far and AMC only go? Well, first of all, let me just say that again, if it only hits 44, okay, 44 is the June high here. And our June high isn't even really out of the range. It's at $6. Comparably, percentage-wise, there's also this idea that like, well, GameStop's always going to run farther or something. Maybe it will, maybe it won't. But that's like 130% just to get to the creek. If it goes farther than that, it's going to be significantly higher. If it goes all the way up to 85, that's like almost 400%. These moves are huge, okay? We're talking about fairly similar percentage moves here, though, for AMC. Like, moving from where we are now up to 5, that's 150%. I'm not going to be sitting here, like, picking it apart. But going back just to the June tops for both of these guys are very, very similar. They're not exactly the same. Well, maybe GameStop goes a few dollars higher and it's 170%. I don't know. But all I can say with certainty is like, that's pretty 1-to-1. I mean, I don't really need to have like, I don't need to know everything and have a crystal ball to know that that's pretty close to the same. So they're really at a similar spot. Again, it's not rocket science. If you go here and you go up to even if you did like 400% here, that's only $12. I'm not saying that in like a bad way. That's a huge move, guys. But like, this is what I'm trying to say. Like, GME going up to its all-time high right now of 400% move is only AMC going to like $12. And it totally makes sense because of everything we just talked about, why that would be the case. Because if AMC isn't setting up according to vertical levels, but rather according to like, established creek levels, it totally makes sense then, to me anyways, that, oh, maybe it's just going back up to hit, the creek here, right? Well, GME is going to its November levels, so AMC should go to its November levels. Yeah, but I'm sorry, but AMC is on a different path. Like, it's on a downward trend. This may very well equate to going back to November levels for AMC based on like everything that we've talked about. I don't find that to be unreasonable. Some people might say that's unreasonable. It needs to go way higher, but I'm just not. As much as I'm in the AMC, as much as I want it to run, I'm not a fanboy of the movement of AMC as a meme stock. I just don't see it. I think there's a reasonable place for this. I think it makes sense where it may be going. Even in this, I'm like, that's a huge move. Like, I'm just taking this set of parallels and like applying it to right here. That is really where we're landing on right now. That markup of 400% to 12 would be like us moving here in May and having like this massive push up, to June. I mean, these are big moves. These are huge. So conceptually, like, going to 12 may not seem like a lot, and I guess people are not happy that I think it's not going to go that far on this move. I'm like talking about numbers like 8. I'm talking about numbers like 12. I'm talking about numbers like 10. And I'm saying that that's probably where the move is. It's the only one, in my opinion, that makes an incredible amount of sense. And then by comparison, it would kind of demand that GME might be going to like all-time highs, it is significantly different. It just is. They're not the same in that regard. But I will say that all being said, if GameStop can manage to hold there's no reason we shouldn't consider this like a trend, at least for now. There's really no reason, because technically this is where that breakdown happened in the middle. This wave motion right here would make sense. Normally what I do in a wave is I would draw through the middle here, and then I would have like an approximation of like a 50-50 line of when does this hit the top. December 19th is when it hits right here. December 24th is when it hits $88. Like that to me is a very clean trend wave. It has to make obviously certain jumps first, the biggest one being this halfway point, which again, why is it halfway? Because you put it there, Booksy? No, it's just the way that it's built. Like it's built to be halfway across the creek now from where that trend target is. I didn't do that. All right. I didn't tell the stock where to move. It just is. So there's a good chance that if that makes that break over 40s, 44 to 48, it's going to go to near all-time highs, at least 85. It may have an extension to all-time highs or close to it or just under it. That's fine. In the meantime, the same or similar motion here for AMC is more likely. Again, so let's say GameStop ran up to, just by comparison, let's say it ran up to 110, but it didn't actually go over 121 all-time high. Well, the comparison I would draw would be that this doesn't actually go to 1270. This goes to like 1150 or something. That's the comparison I would draw. I would leave it at that and say, well, it just didn't go as high as this parallel. Because that's the way it's set up. And I do believe that. I mean, like I've shown you guys all this different stuff. And I know it's difficult because you don't see all the charts all at once. It may feel like if I did that, it would be a super huge mess, and it is. But every now and then, like I'll put a chart over another one and just see what it looks like, you know. And the macro chart is not, it is not in contrast to this, nor is like a November cycle either, because of the way that these things have worked. Now, I don't have all of them in the same spot. Like this one's really another one of those parallels. It's really the same thing. This is a probably more accurate version of it. You can see those parallels moving up. Same pocket, similar time frame, basically from now until February or March. I've had some folks tell me that maybe they're a little worried. Let me see if they're at waves. This is one of the macro ones. Yeah. This one is one of the messiest charts right now because it's with the liquid, it's like, whoa. But this is actually probably a pretty decent representation of like what the macro wave is. I painstakingly map this. Again, if I'm slightly off, I'm slightly off. The reason that I kept all the lines on there wasn't because I'm a tryhard and I wanted you guys to see how hard I tried. I tried so hard on this. Respect it. It was really because they're used for measurement purposes, and there are some significant differences in this and that and the other. But again, this is really close to what I just showed you a little while ago, where it intersects around like 30 here. And that perceived intersection would be late next year for a second move. What's curious is that the peak or the fastest point of the first move on this wave is where they intersect the middle. That is the peak. That's where it goes the fastest. And that was in the January move. It does move quickly away from the wave, and it actually looks like it abandons it altogether. And the middle of the wave is closer to this two tops in March and August. There's a reason for that. I'm not going to go into crazy high detail about it, but this actually is extremely efficient, even though it looks like garbage. It is a very good, I think, chart. It does show that this is overall like a lapse, though. So if you look at it as a big picture move, and again, I kind of like this because it makes sense to me. Like I look at it like this, and I'm like, yeah, it makes sense. Bottom, and then it tops off. It moves like 50-50 around where that liquid is in the middle, and then it has to come back to it. And at that point, it decides which way to go. Maybe it does go up and goes to like 64 to 100. Maybe it goes back down, and it heads back into the 3 to 5 area or even lower, right? Because in theory, if this kept going, it's kind of amazing, but I looked at it, and this is 100% based on like wave measures. I almost didn't believe my eyes when I saw it, because I took this measurement forward. Again, I painstakingly looked to where I felt like this was definitely where it was. And I was like really confident. I was like, what happens if it keeps going? And it's like way out here in time, right? Years down the line. But it actually came back to it's like a triangulation on 316. Like the marker that we had off that bottom that they've used kind of repeatedly, and the one that we had off May bottom, that's where it intersects the middle again years down the line. If the wavelength here and everything else is correct, I thought that was pretty incredible. I was like, wow. So it's entirely possible that these markings right here, which it makes sense because if you look back, the gap up value here matches the drop value here, which would be the middle of the next wave. The unfortunate part about all this is it does signal that if you distribute right here, or if you can't break out right here, this is potentially a top because you're basically just walking down the stairs. And this, which is once support, is now supply. Anyways, my point in saying all this was, even if you look at like the macro setup here, based on the wavelengths, it implied that the middle of this movement would be here. Essentially starting as early as late November, but then going into January. And one of the dates that came out of that was December 10th. I mean, it's quite amazing. If you look back at the build out, not saying it's going to happen, but if it does, I'm going to be like, yeah, there it was, you know. These are the accelerated motions, right, when it's at the peak. And even here, it's like, oh, it's never going to go up. And then it just rockets, right? Grabs back on, and then it comes back down later. It's pretty incredible, you know. I find that to be extremely interesting. And the pivots here are just so, like, on point once I figured out kind of where that wave needed to be. Not because of those pivots, but just because, right? And like looking at that in relation to where we are now, and it's like, yeah, it sort of suggests that there should be a bottom like right there on the 14th. And that from the 14th up until about January, that's really where you have massive movement. This is when it crossed the middle, and it was right on January 11th. 2021. We weren't at a high there. We were pretty low, but it's basically at the bottom. And then within the next week or so, it starts moving really fast, and it's back to this point. It's caught up to it by March 2021, possibly late February if I'm a little off there. The comparable move here would be being at a bottom here in November, right? And then essentially by December 3rd, or maybe the 10th, potentially, I guess, it's possible, you'd be moving out. And you would get to this place right around mid-January. This is where it'd be in like the squishy middle. This is, again, another chart, right? It's like completely, it seems like it's completely different, but it's not. You know, these all represent like the same concepts. You can see the directional movement as clustered as this is. You can see the directional movement into this pocket here, which represents like a macro middle of the wave, potentially, right? As long as it keeps going, it doesn't break down here. It also is like the perfect kind of liquid slingshot around that $5 middle. It matches the markups, it matches the parallels down, it matches the creeks down, the parallels up. There's just not really anything wrong with it. The only thing that I could say with certainty is that I'm not certain about, beyond that, is I'm not certain about timing. I don't know right here. I couldn't tell you. It's just not possible. And I know people are going to say that they know, they have the answer. It's got to do this or it's got to do that. I don't think it has to do this. I don't think it has to do this. I don't think it has to do that. I'm not going to do that because in 2020, once it breached the bottom, it was done. It built a small support. It was very mild. It did not look interesting at all. I'm sorry. It just doesn't. The S-curve at that time went low. It went lower than what the bottom showed. It just did. What is 400% when we're down $2? 400% is a huge amount of financial freedom for me, but I guess for some folks, they don't believe that. I can't trade for you, so I don't know what you're going to do with that. I'm not going to just sit on 400%. I'm going to make sure I'm positioned well when I see this moment happen, whenever it happens. I don't know when exactly, but I know what it's going to look like, and I'm pretty confident about it. So, I don't know, man. Your anger is kind of misplaced, because if somebody's giving you like a potential out, then you can try your best to take it. Ask what you can do, right? What can you do with that? Not, what is that? That's garbage. Sorry, but I'm not here to give you whatever it is you think you need to get. Like, if you need to get back to $200, I'm not going to give that to you. Like, I'm just not going to. I'm not the guy. I will go through mental gymnastics when it makes sense to do so, but when it doesn't make sense to me, I'm not going to do it. And I hate to be that guy because I know that it hurts, but just because something rocked your world and it's down really low now, there's just nothing in the market ever that says it has to go back. Like, it just doesn't. It doesn't have to go back up to 12. But I think it's reasonable that there's that motion. This doesn't have to go back up to 30s, but I think it's reasonable that it could have that motion, but the timing is kind of slow. And if it's years on or a year plus on from now, I'm not going to still be sitting here talking about that move. If it's there, it's there. And if it's not, it's not.